Hello everyone, welcome to Hot Forex Market Update. So we have seen since Friday a strong dollar due to the solid jobs report, and the strong dollar mode had actually reversed just on the factory orders release just 15 minutes ago, where the factory orders actually came weaker than expected at negative 0.6% against the 0.3% gains expected. That is actually the worst 3-month stretch for factory orders since February 2016. So this explains the reversal that we have seen in euro dollar from 114.20 lows, actually trying to recover all these gains that it faced since Friday. However, we remain in a bearish trend since we have not actually seen at least 50% of the reversal seen since 1490 high. So this means that a bullish outlook could be the case only if we see a break of 114.50 level, or actually the pivot point over here at 114.60. So remains on the negative side. The next real support stands, the immediate support stands at 114.50, or even lower at the second support, the around 114 area. As of dollar yen, remains on the upside, weak yen. China is on holidays to New Year's, Lunar New Year's holidays. Currently is at around retesting the resistance, the second resistance of the day at 110. So is nearly at 10 days highs, if I'm not wrong. So it's a strong resistance area. 110 is a strong resistance area, is holding since the end of December. So only decisive break above this area could actually suggest a retest of the 111 area. Meanwhile, in the intraday picture, a bit of retracement to the factory orders, but still quite strong in the intraday at least. Let's shift, however, in the oil, which actually was the mover of the day, as after the 10 weeks high over here at 56 area, it actually reversed nearly all the gains that we have seen on Friday, crossed below the 54 area, key area, and actually the next real support for oil is down to $53. Immediate support has already broke, which was at the 200 period moving average. So the next real support, if it's actually close decisively below this 54 area, the next real support stands at 53. So this sharp movement can be explained based on the data that we have seen today. Actually, with since the Europe open, and with the negative investor sentiment in Europe, which hit at actually 4 years low, and latest UK construction PMIs, which again came weaker than expected, is what triggered oil to the downside, and along with the factory orders from US, shifted it further to the downside. You can see this gap on the once the data released. So a gap over here of nearly 20 pips, and that was on the data releasement. So we have we are nearly another 60 pips lower. So that was on the dollar, on the US oil. Next support 53, immediate support around 53.50. So meanwhile, another mover of the day was, of course, Aussie, which continues to the downside and is likely to continue being weak, as tomorrow we have RBA interest rate decision. There is not much we don't expect anything to be changed. So the overall sentiment remained on the negative side, with next support at around 0.72 area. So thank you for watching. Have a great trading day for the rest of the day, and have in mind that Google also releases earnings later today at the closing of the US market. So something to add in your watch list. Thank you for watching, and see you later. Bye bye.